line is the chart, right? And we know charts have a powerful essence to them. And essentially what you have here on the chart is a lot of choppy action from this bigger move down. So again, this is what we call a megaphone pattern. These two lines are slightly widening.
Conflict.
And I think and this drives me nuts that the media doesn't talk about, but you could directly blame the Fed for creating the wage crisis where these wages have gone up so substantially, because I truly believe that over the last couple of years, as the Fed was just propping the market up and you had the crypto surge, you had stocks just never going down, there were plenty of people that were like, well, why am I working at McDonald's for $10 an hour when I could be a trader and make way more? And, on Robinhood and all these other apps, they're making way more money buying Dogecoin and all these other things. So they didn't want to go back to work. They were making 10 times, 100 times more money doing trading. So the Fed was elevating the markets, making it so they wouldn't come down. It created people not wanting to work, which then caused these businesses like McDonald's to say, okay, well, now we'll pay $15 or $20 an hour. And that's just more inflation to the system. I mean, it's just this merry-go-round of insanity. Absolutely, they will. And I think it's important for people to also understand that when you see inflation come down to 5%, that doesn't mean prices that had been elevated come back down 5% or they cut half of the gains away. It just means you're going up less at a less high speed, right, or a higher rate. So, I mean, if you're talking gas right now is ridiculous because of the Russian invasion of Ukraine. But, you look at how gas stations behave, and I guarantee it's going to be the same thing where, remember when gas prices go up, they go up immediately when oil goes up. But when oil drops that same amount, it takes like a month or two for them to drop it back down. And you'll see that with prices too. So Americans are going to be paying a lot more for a lot longer. And this is not going to be something that just is gone in a year. Powell's not going to be like, oh, well, prices return to their 2020 levels. No, it's not going to happen that way. Absolutely. Let's take a look. So let me throw out my chart again here. So yeah, I mean, Bitcoin is behaving kind of just like the chart signals it should. Everyone's always saying, well, what's going on with Russia and Ukraine, that should help it. But the bottom line is the chart, right? And we know charts have a powerful essence to them. And essentially what you have here on the chart is a lot of choppy action from this bigger move down. So again, this is what we call a megaphone pattern. These two lines are slightly widening. You could also just call it a bear flag, if you will. But you can just see how you're just going up and down like this inside of this range. Now, if you look at 1,000 of these patterns, right, you'll see that a majority, and again, that 60%, 70, 80%, something in that range, of eventually what ends up happening is you'll see, pops and then eventually a breakdown to the downside. So again, as of now, as long as you stay within this pattern, this is a midterm bearish signal. It doesn't mean it's going to break down tomorrow or even next week, but inevitably, if you continue chopping sideways, we refer to it in the technical analysis world as bearish consolidation. So, again, I love it long term, and you can play lots of short-term moves inside of this range. But you should all, at least for me, I'm expecting it to drop significantly more. I still have a price target sub 20,000 or just sub 20,000. The biggest thing is, a lot of people are saying, well, basically have this verse 1 versus 2 scenario, right? Where, Bitcoin has never gone and touched a previous pivot high. So the idea that it would get down to 20,000 is kind of crazy to a lot of Bitcoiners because that would be the first time it ever did that. But then you have the other side, which is, well, if you're entering a bear market or a crypto winter, well, then you have 80 to 85% declines historically. And then that puts it way below 20,000. So, one of these scenarios is going to be right. One of them is going to be wrong. I happen to be in your camp. And that was, by the way, a great point. I actually was doing that analysis this weekend, where if you look at this here, you have basically a parallel channel here, right? So pivot point, and then it broke above and retested there, and you have pivot point, pivot point, pivot point. So notice how that channel is downsloping. This channel is kind of upsloping, and you're right. Downsloping channels have a much bigger propensity to break up like this one did versus slightly upsloping chop is a bigger propensity to break down. So again, like they're very minor details here that most investors wouldn't see, but when you really look at these charts closely, there is differences here, and investors need to understand the probabilities that come off of it. Yeah, and the liquidity issue that you mentioned is important because, you know, you could say, okay, well, that means more people are holding their Bitcoin versus having it on exchanges, which is a positive maybe for the longer term. But when something's less liquid, it doesn't take much of a sell to cause a big drop. And then again, that could be what ends up happening, where we just see a 1 week flush down sub 20,000, and then maybe at that point it ends. I don't know. But definitely the chart's signaling that at this point, and it's interesting with the liquidity and how, you know, little is on the exchanges. And I think one of the big differences that Bitcoin hasn't experienced really is that, you know, since its inception in 2009, this is the first time that we've seen significant inflation where the Fed can't necessarily go right back to printing money, right? Which is, you know, you could argue that was the base case for why Bitcoin was needed, right? Now, if you stop that printing press, at least for a short amount of time, it's kind of a new scenario for Bitcoin. And again, to me, that could be a reason also to see further downside, just like in tech stocks. One of the big things you brought up, which is something that I watch for, is that psychological indicator, right? So if you go back to like 2018, 2019, I still remember it vividly, and this is where I started to get bullish on Bitcoin back then, when we were in that 5,000-ish range, is when, you know, CNBC had just had the ticker on their lower thing like constantly, 2017 all the way into early 2018, and kind of, I think it was late 2018 or early 2019, it kind of just vanished, right? And they didn't talk about it much at all. It almost never came up. And at that point, there was so much bearishness. Will Bitcoin survive and all these things? And then it's like, that is the time to buy. And everyone, I mean, on Twitter, I see it. Everyone's like, oh, if Bitcoin goes to 20,000, I'm going to buy everything. I'll sell a kidney, even someone said, right? And the essence of it is if wherever the bottom is, people, the general nature is to make people so scared that they don't buy it there, right? That's when you know the bottom is there, right? So lots of little things like this to just pay attention to, and I'm a big fan of looking at markets from a psychological basis. Huge amount of success in picking bottoms and tops that way. Yeah, so for me, on a technical basis, this orange trend line would be something that if we started trading above here, and I don't just mean piercing, because you could see over here it pierced briefly. You could even argue that it closed one day above and then reversed back down. But if you started really trading above this area, then at least I would say it's going back to this point here around 52,000, or the midpoint of this channel. That would be the beginnings of something that I'd pay attention to. And then obviously if we start trading up, I think people start jumping back in. There's that momentum trade that would kick back in at a certain price when you start to get closer, and eventually you would get through that. Now, to see that, I mean, I will say this, is that, you know, a lot of people have bashed the Biden administration for lots of things related to crypto, but the regulation last week that was brought out is super, super positive. It's not a negative for crypto, and it's that on that track of what I've said for a long time, which is you need regulation in the space to get bigger adoption, meaning that if you want pension funds and you want more institutional money and you want the 80-year-old that has $50 million to actually invest some in crypto, you need to see things that are setting up to make it safer for those investors, right? They're risk adverse people. They have so much money, they don't need to take risks. They want kind of safe trades. And that would be something that I would watch for. So more regulation on the positive side. And I think that the Biden administration really took a nice step this way, this direction last week. It's important, you know, you look at what China has done over the last couple of years, and a lot of people don't remember this, but when they kind of went on the offensive to get rid of Bitcoin and purge it and get it out of the system, to me, that was one of the best things that they could have done for the US in terms of adopting it, because you basically created this new hub of mining taking place in Texas and these other areas in the US, which is now employing a lot of people, and there's a lot of money tied up in it, right? And then we've seen Microsoft go out and buy Activision Blizzard, I think it was, and you know, just this adoption in that way. And that's huge, because it basically will keep the government from cracking down in a bad way on cryptocurrency. So longer term, that's huge. It doesn't necessarily tell you it's going right back to 100,000 or 69,000 at this point, but those type of things have been very positive for US adoption and being okay with it on that regulatory side.